Hello and welcome. I'm Anna Nichols. I'm the Director of Communication at Altair Advisers, and I'm joined today by Don Sorota, a managing partner at Altair. And we're here to talk about an option for borrowing that has wealth transfer benefits that clients often ask us about, which is intra-family loans. Don, maybe we can start off today by, if I can ask you, can you give us a high-level definition of what an intra-family loan is?
Thanks, Anna. I'm happy to do that. An intra-family loan is a borrowing mechanism where a senior generation is lending money to either a child or grandchild, typically for a home purchase or a business loan, maybe to start a company. And it's an alternative to going to a third-party bank and borrowing from a commercial banking organization.
Okay, so what are some of the benefits and the reasons why clients would want to do these instead of going to a commercial lender? Why goes with the family?
And there's a number of benefits to interfamily loans versus borrowing from a commercial bank. First one being that the interest rate is very competitive through an interfamily loan. The interest rate is set by the IRS through what's called the applicable federal rates. These rates are updated on a monthly basis and are far lower than commercial banks would be offering. Second, a lender through an interfamily loan might have less than stellar credit. They might not even be able to borrow from a commercial bank, but they could borrow from a family member. That's certainly beneficial in that type of situation. These loans come with typically a lot less lending fees than what a commercial bank would charge. And finally, if the loan is set up through the use of the applicable federal rate, this would not be deemed a gift for gift and estate tax purposes, and therefore it's has these quasi benefits of wealth transfer.
Don, what are the situations where you've seen an intrafamily loan work well? And sort of the flip side of that, are there situations where you would not recommend that as a good option?
An interfamily loan works really well in the case of a child or grandchild that is looking to borrow, say, for a home mortgage, but their resources might not allow them to get into the neighborhood that they otherwise want, or buy a big enough house to meet the needs of their family. And so with an interfamily loan, because of the lower rate of interest, they can have more dollars to pay a lower mortgage than they would through a commercial bank. Additionally, there's no requirements for a certain down payment for an interfamily loan. A child or grandchild could borrow up to 100% of the borrowing costs versus a commercial bank that might want a 20% down payment. And so again, it allows their dollars, when they're making ongoing monthly interest payments, provide a nicer home, a bigger home, or in a better location than what they could otherwise get from a commercial bank.
Can you talk a little bit about what things clients need to be aware of if they do decide they want to take this approach?
Sure. When you implement an interfamily loan, you're going to want to have an attorney draft up a promissory note that the borrower and the lender signs off on. You're going to want to, in the case of a home loan, prepare a mortgage and have an attorney write up a deed and record that mortgage so that the interest expense is deductible for the borrower as mortgage interest expense on one's annual individual income tax return.
So documenting it as a real loan, having the real documentation in place and following that.
That's exactly right. That's exactly right.
Okay. Well, thanks so much, Don, for coming to talk with us about this today. And for those of you who want to learn more, you can go to the Our Thinking section of Altair's website and look under our blogs where there's a new listing for this blog right there on the website for more details. Thanks so much, everyone. Have a great day.